Spoiler alert, when you get a tax refund, it doesn't mean that the government is sending you the government's money. When you get a tax refund, it means the government is giving you back some of your money. Because a tax refund is a refunding to you of taxes you paid in excess of the taxes you were required to pay. And income taxes are funny because we all hate them, and yet we all pay them. And, you know, one of the realities of income tax is that when you have a big tax bill, you should be really, really proud because it means you made a bunch of money. And in America, making money is a good thing, it's a sign of accomplishment, and you should be glad you did that. But almost nobody is, really. They're kind of cranky about it as a general rule. But the reality is the more you earn, the more you are going to be asked to pay taxes. And there may be techniques that you can use to minimize that, but there might not be. And the key is to understand your situation and make good choices for your goals. And sometimes that requires some planning because sometimes they'll need to make quarterly tax payments. Sometimes they can structure it so that it comes out of each distribution, but it's often a choice and a process that they need to embrace. And for many families, it's a change. And that's part of the retirement journey. You're going from accumulating wealth to consuming your wealth. You're going from saving money and adding to your nest egg to spending money and reducing your nest egg. The transition from working to retirement fundamentally is a place where having a technical expert like a certified financial planner and an advocate for you like a fiduciary financial planner, that's a great resource because I retire about 10 times a year. And so I've been through this transition. I know how it works. I know the places where people tend to trip. I know how to help you avoid the problems that sometimes come.